Now for the day's business news, starting with a historic deal. Swiss banking giant UBS has agreed to take over its troubled rival Credit Suisse for 3 billion Swiss francs, or about $3.2 billion. Yuka Roy is on set to tell us more. Yuka, good morning.
Good morning. Well, Alison, indeed, it's a stunning development over the weekend after recent turmoil in the global banking sector. Now, the all-stock rescue deal was brokered by Swiss regulators and the federal government, bypassing shareholder approval to avoid Credit Suisse, which is considered a systemically important bank, collapsing in a disorderly manner. Such an event would have had ripple effects around the world. Andrew Hilliard reports.
Rescued by one of its biggest rivals, after intense negotiations over the weekend, UBS agreed to buy Credit Suisse in a bid to reassure edgy financial markets and restore people's trust in the banks.
The trust must remain, even if it is stormy at the moment, like the weather today. I also think you have to have confidence, because after all, we have a good government and smart people who will fix it now. That should come good.
To seal the move, the Swiss government said it would provide guarantees against potential losses for UBS. It pushed for a deal with a local competitor, shutting out foreign buyers who'd been eyeing the bank's assets. Regulators had been scrambling to secure a result before financial markets opened on Monday. The reputation of Credit Suisse had already been hit by scandals and compliance failures, so customer and investor confidence was already low. But UBS insists that change is afoot.
Let me be very specific on this. UBS intends to downsize Credit Suisse's investment banking business and align it with our conservative risk culture.
Credit Suisse is the second biggest bank in Switzerland and ranks among the 30 most important banks in the global financial system. But the bank's 50,000 staff now face an uncertain future as UBS looks to wind down its riskier businesses.
Well, so Swiss authorities really rushed to reach a deal before markets opened on Monday. And separately, the world's top central banks also agreed to bolster the global flow of cash on Sunday. But market jitters are not going away. Clearly, European markets sank at the open, with banking shares declining sharply. Deutsche Bank down by about 5%, and France's BNP Paribas down more than 4%. Earlier, Asia's financial hub Hong Kong dropped more than 3%. But Tokyo also down 1.4%, as you can see. This despite the Japanese government saying that the country's banking system won't see a contagion from the US and Europe. As for the two banks concerned, both are sharply down this Monday, with Credit Suisse sinking 62% at the open, UBS down more than almost 11%. Now, the sharp drop in Credit Suisse's shares is understandable as the deal valued them at 0.76 Swiss francs, less than half of their closing price on Friday. No doubt adding to shareholders' frustration after the takeover plan was sealed without their approval. Credit Suisse's shares had already lost more than 90% of their value since the peak in 2007, as the bank became embroiled in a crisis of confidence following a string of scandals and losses. Clients pulled around $118 billion worth of funds in the final quarter of 2022 and billions more in the past few days. Now, UBS wanted to minimize risks and reassure its own investors and clients that the deal would benefit the bank. At the end of last year, UBS, which reports its financial results in US dollars, had $1.1 trillion in total assets. Credit Suisse had about half that, worth $575 billion at December's exchange rate. But the health of their balance sheet was sharply different. While UBS reported $7.7 billion in annual net profit, Credit Suisse made $7.9 billion in net loss in 2022. Now, one bad surprise in the deal also hit Credit Suisse's bondholders. Swiss regulator FINMA said that all of the group's riskiest bonds, called AT1 shares, will be wiped out. They're worth 16 billion Swiss francs, and the move means that people holding them will end up with worthless pieces of paper. This type of bonds was introduced after the financial crisis as a way to transfer banking risk away from taxpayers and onto bondholders. Alison.
All right, Yuka, thank you very much for bringing us the latest in what is a worrying situation in the international banking world.